Well, the biggest names in technology continue to be smart investments. That's according to my guest today, Lew Piantedosi, portfolio manager at Eaton Vance Large Cap Growth Fund. Lew, great to speak with you this morning.
Thanks for having me.
So you recently added to your positions in the core holdings of your fund, and out of those names, Google, Facebook, Apple. What's the best investment, and what are the catalysts that lead you to say this?
Well, we think all three of those names are kind of core franchise names, and depending on your time frame, I think each one has attractive qualities. I mean, with Apple, it's just a great franchise. They've developed a great ecosystem. They're going to return over $200 billion in cash to shareholders over the next 2 years, and the stock we think is undervalued. Google's another story where we think the stock has consolidated for the last year or so, but we think it's ready to break out as we're seeing better monetization metrics out of YouTube, and the new CFO should bring some capital discipline, which I think the market will be very receptive to. Facebook, we think, is just a core franchise. They've got less than 5% share of the global advertising marketplace. And we think that's going to continue to grow over time. So we like that one quite a bit as well.
And with both Google and Facebook, I know one of the things that's been in focus the last couple rounds of earnings with both those companies is how much they're investing into their businesses and expanding into, I guess, sort of non-core parts of their business. What's your take on that?
Well, I think with Google, that's always been one of the concerns. What are they investing in? It's hard to kind of gauge what kind of returns they're getting. But like I said, with the new CFO, we should start to get some better capital discipline from that company, and I think that's a nice catalyst for the stock. With Facebook, they're doing what they should be doing. I mean, they're a growth company. They're growing rapidly, and the returns that they're getting from their investments are very, very healthy. So again, as a growth company, you want them to invest in good high return projects, and you can see by their revenue growth, which is not slowing down one iota, growing north of 50%. With no signs of slowing down, that they're getting a nice return from those investments. And
now we just talked about Facebook, Google, and Apple. What are some of those are really kind of the big boys in tech right now. What are some of the other names you're looking at?
Yeah, we like some of the semiconductor names. The big secular theme is connectivity everywhere, and we think NXP is a nice play on that. As automobiles get more and more semiconductor content, NXP is a nice play on that.
Great. And any other names you're looking? So Internet of Things. Is there anything else you're keeping an eye on, maybe in the software space?
Yeah, we definitely like the software space. Salesforce.com is a name that's been in the news, a target of some potential takeout rumors. We continue to like that stock, great growth prospects, and we can see why others may be interested. It's a very valuable asset, what they're doing. And Tableau Software, a play on big data analytics, which is growing quite rapidly as well.
Great. Well, Lew Piantedosi, thank you for joining us today. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series, Young Money, Tech Bet, Cramer's Mad Money, and all the latest from CNBC.